The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 22nd, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but way more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, we've got you covered. Send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, of course, in our Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow trading up 68 points, 26,269 is the print. S&P is flat at 2923. NASDAQ 100 off 29 points, about 0.4% to the downside. Russell green, semis are green. New York Stock Exchange green, slightly green. Wilshire is off 14 points. That's flat. NASDAQ Composite off 28 points. Spot volatility index right now trading above the 50-day exponential moving average at 1678. I believe it's 1630, 40. Something like that. We'll take a look at that. Gold is off about $7. Silver down 9 cents, and light sweet crude is flat. Leading the charge, the upside, it's Boeing. Ticker symbol BA up $14. That's 4%. Keysight Technologies up nearly 12% or $11. Alta Beauty up 7 and change. San Filippo John and B. Or John B. and Son. It's 8.5% to the upside, $6 and change. To the downside, Amazon, dollar-wise, leading the charge. No big deal. 0.6% off $12. Splunk, now that's down 10% on a volume of 10 million shares. It's about $13. Mercado Libre off about 10, and Sarepta Therapeutics off 8.50. So what are the markets doing, you ask? I'm going to show you exactly what they're doing. They're just trading in between clear support, visible support, and visible resistance. Now, I'm referring to right now the ES Mini, so let's take a look at the 2-hour time frame chart. You're probably getting tired of looking at the 2-hour time frame chart, but you can't get tired of looking at it because it just simply tells the picture of what the market is doing. So all these green horizontal lines out there, they're automatically built into the system, when you get that TD setup 9-count pattern out there. They help us to identify levels of where, in this case here, the 2-hour time frame chart for the ES Mini has broken down in the past. 29.26. 29.35, 29.36. You kind of get the message. That is resistance. We've seen the 29.3650 level get tagged a couple of different times. Even earlier this morning, while I was not around at 10 o'clock, we saw prices move higher, but do with less relative energy, still taking on that area. And then you got the big kibosh during that next half hour, 2 hour, I apologize, 2 hours, 10 till 12, move to the downside. Well, where did it move to? Support. On a 2-hour time frame, really 2 levels of support out here. In the 2-hour time frame, the last breakout was at 29.03 1/4. Now, price didn't hit 29.03 1/4. You got to give it a little bit of slack. Not much, but it hit 29.04 1/4. So 1 full point. You got to love it. Price was also pulling back into a bullish structured profile. That support level between 2900 1/4 and 29.07. So lots of support on that pullback. No support has been broken. Neither has resistance to the upside out there. But that's what the markets are doing, trying to figure out what to do. Now, it's unlikely, it's 1:11 in the afternoon, it's unlikely that either side is going to get busted through today. Now, I can't control that. I don't know that. But resistance is held pretty well. Support is held pretty well. Maybe the markets are just waiting for the magical words from Jackson Hole, Wyoming out there. And now what we've got to do for the next 50 minutes is somehow make this show fun. I've just told you what the markets are doing out there. Neither breaking support, neither breaking resistance. Let's go take a look at the other charts, though. We'll try to fill up this. Of course, it's easier to fill up the time with your calls, with your emails out there, and then I will focus on what it is that you are looking for and need to know. If we take a look at the NQ out here, really the same thing. Its resistance area, 77.5850. And that is held as resistance. Now, price yesterday, for a short period of time, closed above that level, but it was doing so with the Rhodes momentum indicator signal. Then you got the bearish engulfing candle. Now, support here is much further down. It's down at the 75.93 level out here in the NQ. So, yeah, price could move all the way down there. Support hasn't been tested. What price did here this morning was went back to a prior swing point area where it found support. But just trading in between on a 2-hour time frame between support and resistance. Neither good for the bulls or bears out there. It's just kind of a neutral stance. If you take a look at the Dow Equity Futures contract, you got the Dow up 59 points. What is the Dow doing? The same thing. Its resistance level, 26,317. There was a slight close above it, but that didn't last. There was no follow-through. You need to see follow-through on the next trading session, and there was no follow-through. Now, what price did was it pulled back to test the bottom of the profile. That was at 26,115. Its prior breakout area was at 25,961. And so, again, really just a neutral position right now in the markets out there. Let's not leave out the Russell 2000. Let's take a look at its 2-hour time frame chart. And why the 2-hour time frame chart? The reason is that for the last several weeks out here, it has been the chart that has generated the best patterns for identifying tops and bottoms, support and resistance, and therefore that's why we're taking a look at it. So this morning's crush, the 10 to 12 crush out there, obviously was before 12 noon. All the Russell 2000 was doing was pulling back to test its breakout level. 1497.40, never got down there. It was really also pulling back into the top of its TAS market profile for 2 hours. So really, you've got price range, it's range bound between 1497 and 1516 out there. That's what the markets are doing. It is now. What are the markets not doing? But they're so it's conflicted. The markets are conflicted right now. But watch the end of the day. Quite frankly, 1:14 in the afternoon. It doesn't. Now, what else were the markets doing? But let me just try to keep my train of thought here going. So, the end of the day, what you're going to want to be paying attention to is really that spot volatility index. The 50-day exponential moving average is 1640. That was right on the button out there. You're trading at 1675. Another day's close below 1640. Yesterday was a close below the 50-day exponential moving average. And it's just virtually a layup with regard to how the markets are going to respond to Jerome Powell tomorrow. What happens if it closes above the 50-day? The market then doesn't know what it wants to do. But we'll be right back. We'll talk further.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 64, S&P flat out here. Let's go to our first question. This comes in from Lee B. Lee says, "Hey, Steve, I'm looking to buy into dust for a short term, maybe a week. Yes or no?" So let's try to answer it. This way. So we know that, and I don't want to pull out the church. Not that I don't want to. It is just it'll be a waste of. It'll take me several minutes. I don't want to waste your valuable time out here. So I just ask you to please trust me on this because we've done it many times, which is a directional correlation between gold and the mining equities out there. So Lee, what I say is that so we have to really look at both and understand, has a level of support broken, or is price right at resistance? And let's say you're an aggressive trader, price gets to resistance. You say, I'm going to go ahead and take that trade because I believe resistance will hold. And if resistance fails, you'll close out the trade right away. And so since you're talking about short term, I think that you would do that, or you could do that. So let's try to figure this out here. So first, with regard to gold, let's take a look at Goldilocks. And here's what we know about gold. And I apologize if I'm covering what I have covered before. But what I want you to really notice out here, Lee, is really since gold broke out back on May 31st, when I say breakout, what I'm referring to is a close above the top of the TAS market profile. So right now, what you and I are looking at is just our TAS market profiles, our daily TAS market profiles for Goldilocks. What you'll notice along the way to the upside is all pullbacks have found support at the bottom of their profile. So, for example, June 11th, maybe you wanted to go short there, but price was pulling back and never broke through support. So that would have been the wrong decision. We come back to the next time that gold was testing the bottom of its box out here, a new profile. That was July 1st, July 2nd, July 5th, July 9th, July 10th out there. Price did close below the bottom of that box once on July 1st out there, but there was no follow through. Again, going short the mining equities or even gold would have been the wrong decision. Now, price was trading between the top of the profile, absolutely, and the bottom. So certainly there was a decent enough trading range out there. That box was reasonably wide compared to others. If we take a look at other profiles that formed on July 17th, a test of the bottom of the box. On August 2nd, a test of the bottom of the box. So you're kind of getting the gist here that leads us to where we at today. A new profile that formed 3 days ago. The bottom of the box is 1500.30. Now, you may not want to be somebody that chases a momentum move, but you're asking about going short the mining equities, dust, where what we have seen is that the bottom of this box thus far is held 1500.30. Now, the low of the day is 1502.10. So I would say until you see a close, at least one close, preferably two closes below that 1500, whether it's a short-term trade or not, I don't think you want to do it. Now, you may want to do it if gold gets up to 1534.70 and doesn't bust through that. Then, at least from a directional standpoint, you've got gold at a resistance level that you could rely upon. Now, of course, a lot of this could happen when you can't really trade dust. That I can't help out. But at least you would want to try to take that trade if it doesn't close through support when it's up at the resistance level. So that's a daily time frame out here. Let's pare down. Let's go take a look at the 2-hour time frame, Lee. And as we take a look at the 2-hour time frame, it's been working great on the equities. Let's take a look at the at gold itself. Here we can see that right now. We can also see that gold has not broken through support. It broke through one level of support at 1501.20, but there was one right underneath that at 1493.40. These are breakout support levels out here. But when we take a look at, just like it did here a couple of hours ago at 8 o'clock this morning, we saw just a piercing at 1504.50, but at 1501.20, there's also support, okay? So it really held, and it didn't stay down there. It just was one bar and then back above that level. So from a short-term standpoint, we really, when I say short-term, it's a 2-hour time frame chart. But resistance here would be 1525.20. So the reason to take a look at this is maybe you don't wait if you really have a hankering to take on that short. Maybe you wait for 1525.20 if the price of gold gets up to that level to consider that shorter-term trade out there. But the better one would be the daily box. Now we can change this from a 2-hour time frame chart to a 30-minute. Just curious, well, I don't know what the 30-minute shows, but we're going to find out here post-haste or shortly. As soon as all the calculation gets done here. And so what do we have here? So what we have here on the 30-minute time frame chart is, so the 30-minute time frame chart says, you know, Lee is an intelligent guy, because what he's noticed clearly is that on this stair-step way down, what gold has been unable to do is take out resistance levels on the bounces. Now, the last one that where there was an attempt to get towards that resistance was at 4 p.m. on August 20th, a couple days ago, 1519.90. That was, as it was getting up there, was making a TD setup 9-count itself. And then, of course, price moved lower. So here you've got 1517.20. The next time price tried to take out resistance, that was at 2:30 yesterday afternoon, unable to do that. So you're thinking correctly and just take a look at the short-term time frame chart, but really I believe that the larger level of support must fail in order for you to be able to benefit from that and take advantage of that knowledge for looking at a short-term trade. Now, if we take a look at the GDX and see what it is doing out here, we'll pull over this chart for Lee. Here's what we know. I don't see a topping pattern per se out there, or any kind of say, but what we can also see is that it has not broken through support. And right now, support would be 2806. That would be the bottom of its daily profile out there. I can see I don't have all my tools on this chart, so let me add the TD setup 9-count. Give me a minute here to do that, or I don't think it's present. We'll find out. Yeah, it's not. It wasn't. Okay, so now we've got it. So, and Lee, if you see gold close below support, the GDX close below support, the GDX itself, forget about dust, the GDX could make its way to 2275. But don't cross that bridge just yet, because it's just not there. So that's my take when I take a look at answering your response, you know, yes or no. I think I've given you the places to consider doing it. I think you're on the right track, but the bigger level of support just simply hasn't failed. So I think you've got to stay put, so to speak, out there. So thanks for writing in. Much appreciated. Let's see. Do we have any other? Yeah, we've got another question here. Craig writes in and he says, if I need some filler. Craig, I always need filler because I can go off track and could create a huge accident out there. We don't want to do that. So how about a review of the energy stocks and crude oil? So by energy stocks, if I recall correctly, you're considering the XLE. So let's go take a look at it. Let me switch to a different set of worksheets out here. And we'll start off, I'm just trying to get this going. We'll start off by taking a look at light sweet crude. Sorry about that, folks. So here, what do we know about light sweet crude out here? Let's get the profiles going. Sorry, apparently I really can't multitask. But saved by the bell. That's the breakout there. But right now, we've got light sweet crude trading between support and resistance. Resistance 56.35, support 51.34. Be right back. Take a look at this for Craig. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 87, S&P up 2 points right now, and we're taking a look at the energy sector. So let's begin by taking a look at light sweet crude. Just as we were going into the breakout here, we were taking a look at, this is the daily time frame chart. It has both the weekly and the daily profiles out here. So the long trade for the energy sector would benefit if price can close above resistance. And it's been a pretty decent level of resistance. Has been tested about 4 or 5 times in the last week and a half or so. 56.35 is the key number there, Craig. If it can't bust it up, maybe it's going to pull back. Support on this thing, really, there's several levels. 53.68 is one possibility. 53.01, 52.34, and 51.34 out there. So we've really just got kind of a consolidation move out here inside of light sweet crude. So that's what the daily time frame market profiles show us. We're not seeing anything jumping out at us on the 60, 120, or 5-hour time frame charts out here for light sweet crude. Now let's go take a look at the XLE. In the case of the XLE, when we checked it a few days ago, it had the possibility of a Rhodes momentum indicator bottom, and it actually confirmed that. It confirmed that with this gap to the upside, shown as a rising window on my chart out here. So that was a confirmation of a Rhodes momentum indicator bottom. Now, with regard to the XLE, it has resistance at 59.94, Craig, and I don't know whether price will take that out. This is an equally distributed box. What I mean by that is the center line is pretty much in the center of the top and the bottom. So it's neither bulls nor bears have an edge here. If they don't have an edge, and we know that there is a directional correlation between the energy sector and light sweet crude, it's likely, the XLE, likely not to head much higher until there is that further breakout on light sweet crude. So if it pulls back, you know, you do have a valid bottoming pattern as long as those lows aren't taken out, or maybe the XLE pulls back to 56.10. I'm not saying that it will. I'm just saying maybe it does. That could be a buying opportunity, especially if it was on some lighter volume out there. So that's with the daily time frame chart. Now, if price could close over 59.94, it ought to make a run to the 63.44 level. That's its last breakdown resistance. That's how this is set up, the XLE. If we take a look at two of the top stocks in there, see what they're telling us. If we look at ExxonMobil, I'll pull this chart over here. I don't have ExxonMobil on this chart. I don't have the TAS profiles. But what we can see is really when we look at the XOM at ExxonMobil, the chart basically looks the same as the energy sector, the XLE. So, but the question is, and ExxonMobil could make a run for 75, 78. But we'll take a look at its profiles. Chevron is another one, CVX, that we want to take a look at. I do have its profiles up here. No, that's Exxon. Oh, I do have ExxonMobil. I take that back. So here in ExxonMobil, whereas the XLE is not above the top of its daily box, ExxonMobil is. So Exxon is saying, hey, it wants to run higher, or at least it's above resistance. Now, when I say run higher, I'm referring to 73.20 is the next area, and then 75.78 would be the two target levels out here. 73.20 is the bottom of the weekly profile. So it does have some potential out there. But I would caution and hesitate you to pull that trigger now, just knowing that light sweet crude is up at a resistance level out here. And then I would also throw out this caution, because what light sweet crude hasn't done, so we know that on a daily time frame, light sweet crude had got up to the top of its daily box. Now we pull over the weekly time frame chart, where we can see here 50.05 is great support for light sweet crude based upon its weekly breakout area. That area was tested, and there was a hammer 2 weeks ago. So that's beautiful support, a beautiful candle pattern right at support. But we can also see that price has neglected closing above Stevie's red line, and it is red. So my caution to you, Craig, is just that. It's caution out here. You really need light sweet crude to break out. You're up at resistance on the daily. You're up at resistance on the weekly. I say be patient out here, and maybe buy the pullback. And if light sweet crude does pull back, and you've got ExxonMobil, Schlumberger, Chevron, and the XLE all pulling back with some lighter volume out there. That's the best that I can come up with. I hope that helps you out. But it does have a valid bottoming pattern out there, the energy sector. So maybe that is sending you and I a message. We've got a question here from Andrew. Andrew writes in, he says, hi, Steve, I'm a new listener. Well, Andrew, thank you for listening to the show. Glad to have you as a listener out here. So just over the last couple weeks, also new trader, just getting my feet wet. Well, then you're at the right place. This is the home not just this show, but this is the home, TFNN, for new traders for sure. It was my home. It is exactly how I got started. What is now 13 years ago? Golly, time flies. Does it not fly or what? Wow. Okay, I've got a few questions for you. What's the best way to learn how to trade? Oh, boy, I don't know if we can cover that. I may have to do that in an email. I'm mostly interested in swing trading ETFs. I have a couple that I'm closely following, United Airlines. So let's just go take a look at United Airlines for you, since you're looking at those. Now, I'm going to take a look at the stocks you're asking for with regard to how to start. I'll just put together a quick email and respond back to you. That way, many of the other folks might not want to hear me blabbering about that. But let's take a look at United Airlines. What do we know about United Airlines? Now, you're just starting. So what are the tools that you and I use? It's incumbent upon us to make sure that we understand where support and resistance is at. So here we can use our TAS market profiles to do that. And the top of a box, red line, in this case here, is resistance. Blue is, or cyan, is the center where both buyers and sellers believe there's fair value within that price range. And the bottom of the box is where buyers are at, support, 81.50. In the case of United Airlines, it's above on a daily basis resistance. In the case of United Airlines on a weekly basis, it's now just above support. It closed above 84.86, says it's back in its range. Its range would say, hey, I want to make a move to 90.45, and price is trading with inside the box for the monthly time frame out there. So you've been looking at this. The question is, did United Airlines form a bottom? Because ideally, what we like to teach around here is how to identify bottoms, how to buy bottoms versus buy low and sell high. Now, when I take a look at United Airlines on a daily basis, I don't really have a bottoming pattern, but price was moving lower into the area where it had broken out, 78.55. Never got all the way down there, but now price is above Stevie's red line, 85.16. This communicates to me that United Airlines wants to move higher. And on this chart, this would say that price would want to eventually target the 94.44 level out there. So 94.44, and I came up with 90.45, but also 96.03 on the weekly time frame chart out there. You also following in Cisco. So Cisco, you're long. So let's take a look at Cisco. CSCO out here, and see if we can find any news, any good news for you. So you're long Cisco. What we don't like about Cisco right now is prices trading below its daily top of its box. That was resistance. That failed today. Trading below the bottom of the weekly and trading with inside the monthly profile. So we need to go take a look at Cisco, see if it identified a bottoming signal at all on this last pullback out here. And at this stage, unless there's wave number 7, the answer is it hasn't. And where price found resistance was Stevie's red line at 49.18. This looks like Cisco has not finished the bottoming process out here. But again, I don't know where you're in and things of that sort. So I'm going to respond to you by email. Thanks for listening. And we'll look forward to speaking to you again soon. Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 96, S&P is up 3. Let's go out to the city of brotherly love and speak with the brother that we do love. John, how you doing today?
Steve, I'm doing very well. Yourself?
Good. Thanks for asking. And I know you want to talk about the S&P 500, so tell everyone and tell me what you'd like to look at and how I can help you.
Steve, I wanted to ask you for assistance on the bull scenario on the S&P. Just by way of background, I am thoroughly versed in a bearish scenario short term, namely the highs of January 2018, September 2018, and July 2019, all having kissed a trend line and then turned lower. Certainly I can envision and know what I want to do to trade a declining scenario. What I'm working on right now is to be fully prepared for the opposite scenario. In other words, a break over the July high at 30.28 and a large extension higher. Mm-hmm. So I wanted to ask if you would do your magic and pull up the items that you look at that would be a lead indicator clue of that scenario unfolding.
Sure. So the checklist would go like this. The checklist begins with the 2-hour time frame chart for the ES Mini. And if we see a clear and convincing move above 29.3650, that will be the first short-term intraday time period signal of the market that wants to move higher. So I'm watching that range at 29.3650 level. I'd like to see 2 closes above that area from a 2-hour time frame. I'd like to see that with strength, with relative strength. The last couple of times up here, it has been with less relative strength. So I'd like to see that pattern go away. So that's the first thing that I would be looking at. And there's plenty of resistance. Not only was there resistance on the 2-hour time frame chart, what we will see here when we take a look at the ES Mini, folks, is we will see, and I turned off the weekly, a set of horizontal trading ranges just because the daily, which are blue, and the monthly, which are red, are so lined up with each other and just simply is a little bit less cluttered out here. And here, John, what we can see is that 29.34 level has been real strong resistance. It's been resistance ever since August the 8th out here. And it's a daily time frame that we're looking at, but this has has a monthly set of horizontal trading ranges. So this would say if there was a nice close above 29.34, not a couple of ticks, but a nice close above 29.34, that could set up the run back to that trend line, that rising trend line. Maybe it's just to the 30.30 area, 30.15, but that's what needs to take place in order for the S&P to continue higher. And then there's one other piece. So all this did here, these two charts, John, and for everybody else, all this did was establish a significant resistance where we're at, and really hence the reasons why John could be easily swayed to really just focus on the bearish case out here. If the bearish case or the bullish case is going to take place, this is what will also occur, and that is with regard to the spot volatility index. And here, the boxes and rectangles that are in yellow in the price area for the S&P 500, the yellow boxes identify time periods where the spot volatility index is above its 50-day exponential moving average. And you can see, other than little counter trend rallies and so forth, generally speaking, the right move there was to be short. Likewise, when that spot volatility index begins trading below the 50-day, those would be the green rectangle boxes in the S&P area, as well as the bottom of the chart, the VIX area. It, generally speaking, being long was the correct position. So you can see how well this is working. There's no reason for me to believe that this won't continue to work. Right now, we're chopping around the 50-day. And it would only make sense that we're chopping around the 50-day because the S&P is right up resistance, trying to figure out what to do. I can easily see the reason to take a short position right now. Spot volatility is above the 50-day, but just by a smidgen, only 20 cents right now. And that number is 1639 to be watching. But if the markets are going to move higher, John, I guarantee you, as much as I can guarantee anything, that the spot volatility index will be below its 50-day exponential moving average. So I think the trade is pretty easy. You watch the spot volatility, it's 50-day, and those resistance levels that are so clearly delineated out there, and they would assist you in identifying what the market is intending to do.
Steve, thanks so much on that. One thing I haven't seen you do lately, which you do when markets are breaking to higher highs, so I'll ask it here now. I'm wondering if you can pull up either your weekly or monthly chart going back, a couple of years, maybe you're doing 2, 3, or maybe 5 years, I'm not sure, where you can display using your tools what higher targets exist if we get over 30.30 on the S&P.
So, for that, John, because we would be breaking new ground, I guess there would be a couple of different ways to look at it. So one way, first, the easy way to answer your question with regard to those price targets for me is just going back and take a look at the horizontal trading range levels. So above 30.30, it brings into play the 31.27 level, and that would be the monthly horizontal trading range level. So that's one way to do it. Another way to do it is just simply take a look at the S&P 500 on a quarterly basis. And the quarterly basis here shows the A to B equals CD pattern that is underway. And that A to B equals CD pattern, the one-to-one price projection is 32.78. But based on this A to B equals CD pattern, because it was really just a very small retracement when we take a look at the quarterly move, that was the 2015 retrace or consolidation that went on. Prices, and see how price is trading right now along the inside left of the C to D leg. What that communicates to us, John, is that this is going to be more than a one-to-one A to B equals CD pattern. So levels are 32.78, that's the one-to-one. 36.77, that's the 1-to-1.272, and 41.85, that's the 1-to-1.618 area. So those would, in essence, would be my larger price targets for the S&P 500. Is that what you were looking for?
That's exactly what I was looking for, Steve. Thank you.
Okay, perfect. Well, that's great. Always good to hear from you. Thanks for calling, and we'll look forward to speaking to you again soon.
Appreciate it.
You bet. That was John from the city of a brotherly love. And folks, and for our new trader out there, join the Tiger's Den. At a minimum, I believe there's a 30-day free trial for it. And, you know, one of the geniuses, we have many, so just one of the geniuses was just on the phone. And he shares with everybody what he's doing, his thoughts and so forth. You're looking for education. To educate yourself, you have to immerse yourself into technical trading. You can't dabble at it. You can't be a stressor. You've got to be a master. And what masters do is they immerse themselves. And proximity is power. The Tiger's Den, TFNN.com. That's how you do it. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago, with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your gold report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned, because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Listen, I will be on vacation all of next week. Won't return until the day after Labor Day, that Tuesday. And I'm unable to do tomorrow's show as well. So this is it for the next about 10 days or so out there. And let's go to our last question coming in here from Marvin A. Marvin he'd like to take a short trade on advanced micro devices. at these levels. So he's asking, what do the technical patterns look like for this trade? So here's what we know about advanced micro devices. We know that price is trading above the top of its daily profile, trading with inside the weekly profile, bullish in structure above the center of the box at 31.15. And so what this says here is you need to sit tight. I know you say at these levels, but it looks to me like what the charts here based on the profiles are telling us that AMD wants to trade higher. Maybe head back to its prior highs where there is some resistance, the resistance set up by this little shooting star candle. That shooting star candle was last week. And so if price gets up to the 34.86 level, then maybe you've got something. Now, that level was tested already this week. You're at 1.3 billion shares. Last week was 1.1 billion shares. So, oh, geez, this is a monthly chart. Not last week, last month. So price has tested the top of that with volume already. The month is not over. This is suggesting to me that price for AMD will be back up to test that 34.86 level. And so let's take a look at the daily time frame charts. What do the daily charts show us? Daily charts aren't giving me anything more than just really kind of a sideways consolidation. And so the consolidation pattern says you want to sell towards the top of that consolidation. You're in the middle of the consolidation, Marvin. So I think you've got to sit tight here for a bit. And if I look at the weekly chart, anything else out here? Maybe all that the bounce gets is 32.86. That's a maybe. I don't see the short in AMD right here, right now. But thanks for asking, folks. I'll see you in about 10 days, the Tuesday after Labor Day. Have a great 10 days. Until then, au revoir. Take care.